Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Tuesday the 31st of the 8th, 2021. The time is just coming up to 0500, 5 o'clock in the morning UK time. Asian session coming to a close, European session firing up, our lunchtime North American session. Right, yesterday, Monday the 30th then, we had a negative opposed driver in the yen at minus 14. Front and back door flows, mainly going into the euro at plus 13, into the dollar at plus 7, and the pound was the negative rock at minus 6. Activity plus or minus 20. Intra week then, this is from the Monday the 30th, open to about 15 minutes ago. We've got a positive opposed driver in the euro at plus 39. Front and back door flows, mainly coming out the dollar at minus 26, out the yen at minus 22, and the pound was the positive rock at plus 9, activity plus or minus 48. Low activity then so far this week. Yesterday we had yen weakness with the euro coming up, and then over the week, because of the Asian session, we've had the euros taken over as the positive driver, and the dollar's getting weakened. Intraday then, this is the Asian session to about 15 minutes ago. So we've got a negative opposed driver in the dollar. Front and back door flows mainly going into the euro at plus 28, into the pound at plus 13, and the yen's the negative rock at minus 6, activity plus or minus 41. Right, so the Asian session, we're starting to see a little bit more dollar weakness taking over against the euro strength. Right, we'll stop it there and write up the flows. Right, we're back, we've written up the flows then. So the euro is strong except against the New Zealand dollar. The yen is weak except against the dollar, the CAD and the AUD. The pound is strong except against the euro, the NZD and the Swiss. The Swiss is strong except against the euro and the NZD. The CAD is weak across the board. The AUD is weak except against the dollar and the CAD. New Zealand is strong across the board, and the dollar is weak except against the CAD. So what have we got? We've got, where is it? We've got CAD weakness across the board, and we've got New Zealand strength. And take your pick in the middle. We've also got quite a bit of still euro strength and dollar weakness going on there. So we'll write up the asset classes, so don't go away. Right, welcome back. We've written up the asset classes. So US dollar index, basically it was chomping higher, it came back, it's now 0.31 from the high. So the dollar has come off about a third. Gold should like that, but it's basically it's 0.45 from the high, so it's just above half marks. Oil is half marks. Basically you've had that issue with Hurricane Ida, which is now a tropical storm, but left a lot of devastation. So there you go, that's oil. Wall Street has been pumping higher, and it's sub the highs, whereas the S&P of the tech are breaking new highs and holding them. So right, the US 10-year, basically you had this, this is the price, so you had this big fall off in the price. So yields were going up recently, and then they're now back up to their high in terms of price. So yields are at their weakest at the moment in relative terms in the US. The bond price chomping up, yields soft, and the yields have come back a little bit, but they're 0.20 from the high. So in summary then, US 10-year yields have have weakened significantly relative to the bond. So you're getting, and you're also seeing strength in the euro dollar, which sort of makes sense. Copper then, it's had a big chop, it had a big breakout, it had a big thump down. It's now 0.28 from the high, so it's thinking about getting back up there. It's just about 30% from its high. US steel then was weak, it broke. It's come back, it's 0.33 from the high, so it's a third, roughly a third from its modelled high. Right, what's been knocking it about, or has knocked it about? China's had manufacturing and non-manufacturing PMI inflation data, which has been soft. It's negative, not helpful if you're looking for strong data there. We've got Euro CPI today and CAD GDP, plus German Tier 2 unemployment rates. So that's interesting. Wednesday tomorrow, we've got Wednesday the 1st of September, we've got AUD GDP, German retail sales and US ADP. So we're starting to run into the mid of the week, which is lining us up for Friday's NFP. Right, so let's get rid of this and then try and make some sense for today. So we've had a bit of euro strength creeping in the flows, and let's have a look then. So basically, where are we? This week has been relatively low activity, so there's not been much market movement. But what it is showing us is that the euro has stiffened up and the dollar has basically weakened. Last week, just to remind you, we had the pound driving the market positively, the bulk of it going out the yen and out the dollar, and the euro was strong as the positive rock. So we've in terms of weekly flows, we've basically got a strengthening in the euro, a strengthening in the yen slightly, and the pound is also thinking about coming off. So that's where we are in terms of the flows. So let's have a look. Dollar, euro, yen, pound. Bear in mind that the dollar index is now sort of it's, where is it? It's 0.331 from the high, but the yields, the US 10-year, which is where is it? US 10-year. US 10 years are sort of punching right at the top of the price range in terms of model terms. So the yields are at the weakest. So that's a flag there. And yesterday, if you remember, we had in the Asian session, the pre-Asian session, we had the dollar being the unopposed negative driver. So the dollar was pretty weak. So that's where we are. And data today, we've got soft inflation data out of China. We're likely to see a further weakening in the dollar. That's what we're looking at, really. And we've got in terms of we've got Euro CPI. So it's dependent on the German retail sales and the Euro CPI noise today. But generally, we're probably looking at a continuation in euro strength and dollar weakness. The yen is likely to be sort of neutral to weak due to the equity transmission, and the pound is likely to be coming off as well. So that's where we are. Commodity currencies. Well, you've got a pump up in the New Zealand. The CAD's come off. And the AUD's soft as well. So you've got a mixed picture there, and the Swiss is relatively strong. So we're looking at this sort of situation then. So running into the right through the European session, depending on the European data, assuming it's relatively soft to neutral, then you're likely to see further dollar weakness. Euro's likely to be stronger, and that's where we are. So it's going to be a little bit messy because the market's very twitched up about the whole situation, really, and the flows are weak. Activity levels are very low, so the market's sort of compressing, waiting for the go signal in either direction. So it's a bit like a Bollinger Band compression, if you like. So that's something to bear in mind. We're going into a period of market compression, which is always followed by a period of volatility. So just bear that in mind. Hope that was useful. Thanks for watching, and see you again tomorrow for the briefing.